I think this is the most important year for Bitcoin that has ever existed.
Over 11 spot Bitcoin ETFs are set to get approved this week.
We are probably days away from a series of ETFs being approved.
And with hundreds of millions of dollars, if not billions, forecasted to flow into Bitcoin over these next few years.
This is the moment for Bitcoin to use that old term, cross the chasm and really see mainstream adoption, where our parents and our grandparents understand what it is, can buy it.
And while this is the very first time in history we've seen adoption from an institutional level like this.
And then do buy it. And I think that if all of this comes to pass, Bitcoin will be a part of the traditional financial lexicon by the end of 2024.
Send this to a friend who invests in Bitcoin so they can be a part of history.
Crypto World's going to find out whether 14 different money managers and ETF issuers will be allowed to launch their own spot Bitcoin exchange traded funds.
So if you're wondering how this affects you, or what comes next?
I suspect the next thing we'll see is that both the exchanges that are going to have to trade these products and the issuers will finish up their paperwork. There's a couple different forms that have to get filed. That's when we'll get a bunch of information like, what are the expense ratios going to be? We still don't know that. These things could come out free. They could come out at 2%. We have no idea. I think everybody's thinking around 50 basis points is probably the over-under on that, but we have no idea. So we'll get that when we see that from the issuers. Then we'll get the approval for these things to trade, and the SEC may or may not give a hard date there to say everybody can start trading, say, on January 21st. They may simply say, all right, everybody go, in which case we might see some of these things start trading next week. We might see a bit of a horse race to see who has their capital markets desk lined up first, and some folks may be ready at 9:30 on one trading day, and other folks may not be able to trade until noon, just because there are a lot of operational considerations in getting any ETF off the ground.
So we are still waiting on some of these issuers to fill in all the details. But no matter who wins, all of these ETFs will be physically backed, meaning everybody will have to actually buy the Bitcoin. And understanding what happened to the gold price back in 2004 when the very first gold ETF was approved and we saw the demand.
And where do you think, Dave, maybe the demand comes from? Do you think this is retail, it's RIAs, it's institutions?
I think initially this is pure froth, right? That's the issue. Because it is the story we've all been talking about, because Bitcoin has already had a heck of a run in the last few months, I don't think that this is going to be one of those things where we immediately have $10 billion in new assets show up. Remember, one of the funds here is Grayscale's GBTC converting. It already has $25 billion in it. So we know what that demand looks like. To me, the real question is when we look back, say in a couple of weeks, maybe a month or two, how much incremental demand has there been over that $25 billion? Because that'll get redistributed a little bit. Grayscale won't hang on to all of that. It'll move to a BlackRock product or a VanEck product or somewhere in there. So when we add all that back up, is there a lot of demand? I think there's some. Most of the new demand will probably come from what I would consider more portfolio allocators.
That means for the first time in Bitcoin's history.
Not traders, not folks who are just trying to take a run on Bitcoin. Those folks already know how to do that. They have lots of ways to do that. But if you're a financial advisor and you're running a model portfolio, putting a 3% slug in your aggressive version of the model, that's where I think the initial assets are going to come from.
And by the way, other countries within these last few years have already adopted this. It's been Gary Gensler, head of the SEC, that has always been pushing back. They actually lost a major case at the end of last year against Grayscale, which is the reason all this is now happening so fast.
Let me talk about the SEC's role here.
But even the former chair of the SEC, Jay Clayton, shares some light on the SEC's thinking.
And what I would say is the three things the SEC felt that they had to get right before they approve it. And, approval is not certain, but I've said that approval this week is not certain, but I believe approval eventually is inevitable.
So here are the three things the SEC needs to see before they approve.
It's coming. Yep. Well, that's good. The disclosure has to be right, okay, so that people understand what they're buying. The second thing is the underlying trading market has to be efficacious. It has to be of a quality that manipulation, the type of, just bad behavior that you don't want to see in an underlying trading market is eliminated or at an acceptable minimum. And then lastly, and this is very important here with the digital asset, the pipes have to work. The product itself, the custody, the create, the redemption. Kate talked about authorized participants and the arbitrage and how this product actually functions. That has to work. So the SEC has to have gotten comfortable that all those things are going to function as they should. I've said many times when I was chair of the SEC, I was concerned about that underlying Bitcoin trading market. So, I think we've gotten past that. On your question about investors, I rarely give investment advice. I don't know whether Bitcoin's going to be worth a lot or a little. I will say this. This is a speculative, volatile asset. No good investment advisor or broker-dealer would tell you to put a substantial portion of your investment assets into a single volatile or speculative asset.
You say that, Jay, I'm sorry to interrupt. You say that, but somebody will, right? I mean, somebody out there in the financial advisory world will say, you know what? You want to make some money in your retirement funds? Get into this. It's going to expand, and somebody's going to lose their shirt, right?
So obviously, the price of any asset, especially Bitcoin, is volatile. I mean, gold, after approval, the price rallied into the approval, and then we had volatility after. Bitcoin's volatility is 10x, if not 100x gold. But again, once these are approved, that's not the finish line. That's the starting line. And we will have to see if there's demand, how much demand, and which issuer wins.
How are they making the decision of which one? Is it going to be purely, as you know, a lot of the ETF flows right now are fee-based. Is that what it's going to be? Is it that the cheapest one is going to win?
The cheapest one's certainly going to have a bit of a leg. We already know that Invesco and Galaxy are going to waive the fee for the first 6 months. That's always a little bit of a gimmick. I don't think most advisors get sucked into those kinds of fee waivers. If one of the big players, the big known names, say like a BlackRock or a Fidelity or somebody, comes out with the cheapest one, I think that's tough to compete against. But interestingly, I think it's where the volume is in the first couple of weeks that matters more than the cost.
So in that case, it does matter who starts trading first.
It can, because if we get a big slug of volume and then the derivatives market shows up and all of a sudden we have a live options market on that particular ticker, that's very hard to ever upset. So we've seen this before with things like gold. GLD finally started trading options. You could come out with the cheapest, best gold product in the world. You'll never pry GLD out of that derivatives ecosystem.
This is an ongoing story. Now is the time to follow, but just understand there is one fundamental flaw in this Bitcoin ETF adoption. You won't be able to buy the dip with Bitcoin ETFs or sell if it goes parabolic, because the stock market literally halts trading when prices drop or increase rapidly. So owning actual Bitcoin, to me, is always better, because if the S&P 500 drops 7%, that equals a 15-minute trading halt, 13%, another 15-minute halt, and 20%, the market closes for the day. So if the market drops heavily one day, you won't be able to buy or sell Bitcoin ETFs. And it's not just the S&P. Trading halts also apply to individual stocks and ETFs, but the calculations are more complex. For example, trading for GameStop stock was halted multiple times back in 2021 and 2022 when the prices pumped. And Bitcoin is way more volatile than GameStop. So if there's a dip or a country starts printing money to buy Bitcoin and we get a God candle, don't be surprised if your buy and sell button for the ETF doesn't work. This is such an important week. I will keep you updated. We drop one video per day, keeping you informed about crypto. Click subscribe.